Do you think the mission-driven piece came first, or the desire to kind of own and operate a company came first? And kind of how did you reconcile those two, right? Because oftentimes I think people think mission-driven is all charitable and there's no profit there, and hey, start your own company is great, you're going to make a lot of money, right? And how do you reconcile and think about the two of those together?
Yeah, I think it was a tandem of both. So I actually have a background. The mission, the Art Mission Foundation, is kind of taken from me when I was a Mormon missionary over in Africa. So I spent 2 years in Africa, 1 year in Uganda, 1 year in Ethiopia. And while I was there, I collected different artifacts. I collected just a lot of things that had a lot of real sentimental value for me. And then when I came home, after spending time over there, it really just kind of sat in a box in my garage, and it didn't really do anything. And what I wanted to do was be able to share those, artifacts, share those art pieces, be able to share those stories with other people, and get some more utility out of something that was just in a box in my garage. And then the thought kind of came to me that there's probably a lot of other people that feel the same way, that maybe it just does fit in the decor of their home today, but that there's still a venue for them to be able to share those artifacts or those art pieces with the world, and also just kind of share the sentimental value that's attached to it. And so finding that specific pain point of, they have something, that's of value, but they're not really utilizing it, was that mission part of it. And then having the nonprofit operations was kind of that good starting block for me to be able to kind of work through some of the kinks of being able to find, kind of my niche and how I operate and how I work with other people as well, in an environment where, I felt like the stakes were a lot less high, because I still had my day-to-day job at that point.
So as you fast forward, now you're running your own company, you do portfolio management, investment advice, RIA, all of those different pieces. Kind of what would, looking back, what would your advice be to, some of these entrepreneurs or sole proprietors who are at the beginning of the journey or just seeing profitability or, trying to figure out, where to put their money in, the market or invest today?
Yeah, I think, one of the first things is, thinking about what makes yourself irreplaceable, either to your company or, if you're still working right now and clocking a 9 to 5, what makes you irreplaceable there? What's something, if you were not there, that they just couldn't do without? And so for me, being able to find that passion in investment management and portfolio management, but then also, understanding what makes me unique, is kind of where I think I'm able to leverage that now as I'm running Tuttle Ventures day to day, and really kind of just making that transition into investing in yourself. If somebody doesn't know what's making themselves irreplaceable, then why would they want to hire you to do the services that you have in a servant-driven business like mine?
How do you go about finding what makes you irreplaceable?
That's a good question. I think I have a couple of like systems in place, like in the morning and then also throughout the day, to be able to take inventory of actually what's maximizing my time the most. First things first is, I come into the day and I have a task list of all the things that I need to do. And then at the end of the day, I look at, okay, this is what I actually did, and this is how much time it took. And so what I found was, over time, the things that took me the most time were often the things that I put off, to the least amount, pushed out as far as I could, were the things that, I wasn't the best at, right? Or things that required a lot of cognitive thinking, that after I did them, I just really felt drained. And so taking that, personal inventory was a great way to be able to identify what my strengths and weaknesses were.
So once you determine what makes you irreplaceable, right? That's where you can double down, extract some of your value, have some purpose, right? Should lead you on the road to generating, more and more profitability for yourself or for the company or, for whatever you're working with. Once you start experiencing that, right? Like where should those people be thinking about, okay, what do I do with my money?
Yeah, I think it's kind of two aspects for the investment management business, right? Because we're analyzing companies and we're seeing how those companies are profitable, right? And are worthy of investments. So that's what I do every day. And then I feel like there's an easy translation into when I'm actually running Tuttle Ventures, and to be able to maximize my time that I'm spending there. For example, everybody has like a way of looking at their business, but for a registered investment advisor like myself, we're all about making sure that people have the time that it takes for them to do what they love most in life, right? Most people don't love reading through 10Ks or for a mutual fund prospectus, right? That's my job. That's what I enjoy doing. And so I siphon off my business into three different segments: sales, marketing, and operations. And so I created those segments so that I can channel what I'm passionate about and what energizes me and what's utilizing my strengths into each one of those segments for the business. And also just bringing in multiple income streams, right? So if I'm analyzing a company and I see, okay, this is Amazon and they have a cloud business, and they also have a consumer retail business, right? And the cloud business is really funding this retail business as they continue to grow operations and scale things to the massive company that Amazon is today. So identifying where are the multiple income streams coming from your business to be able to have you maximize your profitability is also vitally important.
That makes sense. So as we take that a step forward, right? Let's say John Smith has a production company manufacturing KN85 95 masks, and they're killing it right now, given the demand. And he comes to you and says, Darin, what should I do with my money, or what should I be thinking about, right? Like, what's that piece of advice that you would give him on where to start?
Yeah, I kind of think of, where to start, right, is having some clearly defined goals, right? I can't help somebody if they don't have, clearly defined goals. That's first of all. For some people, one goal may be different from another. So let's get some clearly defined goals in line, and then we can certainly help you from there. The second thing is I help people think about, their company or, their personal finances in the same way that they look at the company. So you have bond-like income, which is, steady, reoccurring payments, usually on a set distribution schedule. Maybe you're getting paid weekly. Maybe you're getting paid 2 times a month. Maybe you're getting paid monthly, right? That can be stable for your bond-like income for your business. And then the second is, what are your equity like investments in yourself? What is something that you're putting $1 in today, but in the future you could get $10 out of, and potentially that's more volatile as well. Maybe you get $10 one month and $1 the next month. Let's separate out those income streams and be able to identify the right mix for you between bonds and stocks to be able to maximize your profitability.
So if someone was coming to you and they're after passive income, right? They want to be able to just rest and live off of passive income, right? Maybe they've got a portion of the portfolio that's growing on the equity side. But what would you recommend in terms of evaluating from, building that passive income to, be able to take care of them for the rest of their lives?
Well, I'd say that a lot harder today than it was 10 years ago, right? As interest rates drop, it makes it easier to borrow money, but then it also makes it more difficult to be able to get the right amount of income that you need to sustain your lifestyle. So we identified those goals. We recognize the kind of lifestyle that you want to live. From there, it's a simple math equation. Do we have enough assets right now to be able to pull income, bond-like income from those investments? So on a more conservative side, you're probably looking at 3 to 4% income in some very stable investments in terms of high quality corporate bonds, or you're looking at maybe some municipal bonds for some tax-free income. From there, if you're looking to be a little bit more moderately aggressive, let's say in the 5 to 6% range, you're kind of expanding out your investment capabilities there. So you're probably adding in some real estate investment trusts. You're probably looking at some MLPs or some partnerships in some conglomerates, maybe oil and gas, to be able to supplement that income. And then you're also probably looking at some floating rate debt, in terms of credit quality for companies that are a little bit on the lower side, below investment grade, but they can still give you yields that are around 5 or 6%. From there, there's also the very aggressive side, right? This is if you're after 8 to 10% income, and that's where you have to get a little bit more creative, but it's certainly achievable. One of those is called structured products. It's actually a product that's produced by the bank that has asymmetric payoffs. So you would contribute maybe a lump sum, and it would put you on the downside to up to about 20%. And then on the upside, you can get about 10% income annualized on that type of financial product that's linked to an equity index. There's also, just real estate partnerships that also have, higher cap rates. It's a little bit more risk, maybe hospitality or hotels, as opposed to, just commercial real estate with lower cap rates. So those are, kind of the spectrum. If you're looking at more conservative sources of income, or if you're looking at more aggressive sources of income, it's all about, creating that portfolio that's right, based on the goals and the lifestyle that person wants to live.
If you had to pick one that gave you the biggest bang for the buck today, what do you think that would be?
Do you mean for Tuttle Ventures as a business, or just like in general in terms of generating income from different investment strategies?
Yeah, I would say generating income, right? Passive income, I hear a lot, right? So I don't know if there's one that's in that frame, right? But obviously you were outlining, different risk that has different returns, right? And curious from your perspective, right? Obviously, as you move up, there's a different risk profile, but, is there one that you think gives you the biggest bang for the buck, given, the risk you take on and the return in the current market?
I'm a little bit biased, right? Because I am a founder and I am a business owner, right? So I think that right now, a potential, great investment with, some great trade-offs in terms of what you're putting in and what you can potentially get out is found just in buying other companies. So there's an example of a company called Micro Acquire, and Micro Acquire is essentially a platform. So if you have Stripe payments, or if you're getting paid from Shopify, and you have monthly reoccurring revenues of, let's say, between 4,000 and 10,000, you can actually list your company on Micro Acquire, and you fill out, just a form that is standardized to be able to vet investment, and then Micro Acquire will list your company to potential investors to be able to match them up with buyers, and so there's a range. Some monthly recurring revenue from software companies on Micro Acquire will get acquired for $100,000, and some of them will get paid out for $3 million. And so when you are an investor and you actually buy these companies, you're getting a dedicated track record that is verified from the payment structure on Shopify or some of these other payment acceptance companies. And then you're also just able to take over that reoccurring revenue and be able to identify the companies that match with what you're actually looking for. So if I had $1 million and I could buy 15 different companies on micro acquire, I think right now is a great time to be able to do that.
It's fascinating. It's bringing crowdsourcing to angel investing almost, which is pretty cool to see in execution. If someone's going to micro acquire, what are one or two things that they should be looking for in these companies as they're assessing, do I put my money in company A versus company X?
Yeah, I mean, for me, when I look at ownership, right, I always take like a never sell approach. So I'm looking at things for the long term. Is this a company that I would be willing to hold, for the next 5, 10, 20, 30 years? Where are their reoccurring revenues coming from? Are they making, fidget spinners, and maybe it's a potential fad that could phase out? Are they making something that's a little bit more boring, right? The more boring a company is in the way that they make money, the more I like them overall as an investment.
That's funny. It's the opposite of what I think the general consensus would be, right? I think general consensus goes after the flashy new thing is the thing that can be big, but tried and true, it seems to outperform it in the long haul. As we're wrapping up here, Darin, what would be one thing, if you could share one piece of advice, right, with someone who's coming into profitability and cash, what would it be?
I think, I think that having the ability to understand what your retained earnings are for the business and how you're maximizing those earnings is most important, right? So if I can take that profitability and I can give it to somebody else who can leverage it better and get a greater return, then I am certainly open to that, right? I'm not a know-it-all, but I'm certainly a learn-it-all. So I love learning from other people, learning their processes, seeing how they maximize, business retained earnings, and being comfortable, being able to trust those to be able to grow your investments, I think is vitally important, because you can only do so much in any given day.
That makes a lot of sense. For our listeners who want to connect back with you, Darin, what's the best way for them to reach you?
Yeah, I'm not hard to find. You can find me at www.tuttleventures.com. You can also find me on LinkedIn with Darin Tuttle, DarinTuttle. I'm also pretty active on Twitter, Darin_T80. So those are probably the 3 ways that you can find me and get in touch.
Awesome. Appreciate the time today, Darin, and look forward to staying in touch.